Today we have CA Venugopal Ji to speak on, to deliberate on income recognition and classification of advances. Can I request CA Divya as chairperson to escort the speaker on to dais and then welcome him with us. Total okay. Thank you, sir. I have privilege in introducing today's speaker to you all. Venugopal Ji is a fellow member of Chartered Accountancy. He is a Lisa from my Institute of Chartered Accountants of India. Also a certified information systems auditor. He is the founder partner of Messrs. Venu and Vinay, Chartered Accountants since 2002, and he has scored 45th rank in CA final year. He has done almost all certification from Institute of Chartered Accountants of India, and also done 1-year course from IIM on data analysis and business intelligence. He is an active speaker at ICAI on GST. He conducts workshops on filing returns with easy use of automation. He has developed a lot of Excel-based free utilities on GST. And also, he is the GST faculty for the Institute and conducted various workshops on and webinars. He has played an active role in drafting and design of e-invoice along with GSTN and NIC. He conducted various workshops for corporates on use of technology, improve efficiency at work using Excel, building automated reports from accounting and financial applications. With this brief introduction, I present before you CA Venugopal Gella, sir. Over to you.
Good afternoon. Firstly, I thank Bangalore branch for giving an opportunity to speak on this subject, bank branch audit, and in the day 2 we are talking about IRAC norms related points. Firstly, let me start saying that there is nothing new in the provisioning or asset classification in this financial year. There is no change in any of the norms. So whatever the knowledge that you have about the classification and provisioning absolutely stands correct. But having said that, definitely branch audit is not something we do regularly, like maybe an internal audit or an engagement of tax audit, chat audit, etc. Those who do concurrent audits, definitely they are in touch with the branches every month, so they have a fair idea. Otherwise, for most of the members, it is an affair once in a year, which starts in the April, right? So, with the efflux of time, so the memory would have got faded. So, it's an opportunity to refresh our memory. And IRAC norms definitely is a very important aspect to know, because we are dealing, when we are finalizing the balance sheet, the majority of the purpose of the banking is to raise deposits and give advances. That being the business, so the classification of that aspect of it has to be correct. Right? And today everything is system driven. So even when you go and ask anything to the manager, he says, "Sir, ella system level." There is nothing for me to do. You ask any question, it's there in the system. Right? That's the standard answer that we get. So today's session, we will have an idea of IRAC is like income recognition and asset classification. We will look at how the assets should be classified and how the incomes should be recognized. And as the manager says, as everyone says, it is CBS. CBS does the classification of recognition of income. CBS does the classification of assets. But however, there would be situations where there would be errors that would happen in the CBS. Okay? So we are also going to see what are the likely errors of which CBS will not be handling it, will be taking care. And we have the session till 6 o'clock. Roughly we will have a break at around 4 o'clock, sir. 4 o'clock we will have a small tea break so that you can come back with energy and listen more better. Okay. So we will start with understanding the advances. What are the various types of advances and how do we review these advances? We will start with understanding of the basic thing. I am sure yesterday there was a LFR session happened, right? So, which part of the LFR deals with the advances? LFR has 4 sections. Part 1, part 2, part 3. Assets. Which part? First part itself is assets. We start with cash and bank and other things, right? Okay. Now, if I have to ask you a question about advances, what are the various types of advances that would be there in the branch? Well, the terminologies we use in the banking terminology. So, where I would have given loan, extended lending, that's one type of loan, and we use the word for it, fund based. Then the other type is non-fund based. In fund based, term loan, demand loans, cash credit, overdraft accounts. And non-fund based, guarantees that have been issued, and if the guarantee is invoked, bills discounted, fund based or non-fund based? Yeah. So wherever the fund is going out, it is fund based, and if it is not fund, I am just giving a guarantee. I am just issuing a letter of credit till the point it is invoked. So it is my word is out there. So the non-fund based, should it be there in the balance sheet? Is there any risk for the non-fund based? So it would also be there in the balance sheet. When you are certifying, you will be certifying a value of how much is the non-fund based contingent assets and liability, a certificate that we will issue, and that also has to be verified. Okay. The difference between term loan and the CCOD, what is the major difference?
Duration, short
Short term and long term. Can you elaborate more when you say short term and long term?
Normally it is repayable within 12 months, so CC and
CC repayable within 12 months, and term loan is little longer. So from the Schedule 3 perspective, where do we classify? Term loans in which category? Long-term borrowings. And the CCOD? Short-term borrowings or current liabilities?
Correct.
Short-term borrowings. Okay. That is theory. But look at practice. This OD is kind of a long-term loan. Every year it will be renewed. You will find every year this OD. But the term loan will reduce after 3 years, 4 years, the term loan will vanish. Technically, this is short-term loan, that is long-term loan. Yes or no? But what does the form says? The form in which we have taken this loan, as sir rightly said, it is demand loan, like you will be repaying on the demand, which means I have given you loan only for 1 year. After 1 year, at my wish, if I renew, it will continue, otherwise it lapses and one has to pay. As per the paper, the shelf life of this is only 1 year, hence we call it as your short-term borrowing. Right? So broadly your understanding is correct. So the advances are fund-based and non-fund-based. When we say fund-based, where the lending happened, the money went out. So when you see the balance sheet, any branch that you are going for, most of us would be doing audit in a regular branches where there are banking, there are asset recovery banks, there are other types of branches, but very few people do the audit. But predominantly when we do the audits, in the balance sheet, you will find this weighs at least 80% of the total balance sheet size. And the corresponding deposits, there would be deposit oriented banks where there are only deposits, or if there are no deposits, the funds are given by the head office. So the contra for the deposits and the advances would be parked most likely would be interbranch head office balance account. If it's a deposit oriented branch, you will see the liability side the deposits and a few assets, and the rest of the money is in the head office, or the predominantly it is doing the lending activity and say industrial area and other areas. You will find the assets which is the loans that have been given as a major portion of the sales. So as an activity to start the bank branch audit, it is always good to prepare a balance sheet in a simple condensed way, the way in which you can understand. Like how much is deposits, how much is advances, what are the other than advances, other than deposits. If you prepare, maybe on a simple Excel sheet on a pen and paper, if you just prepare it and apply some percentage to it, you will get an idea of what is that you are doing audit of. And let's say the advances are constituting 80% of it. The next thing that you have to do is you have to get the further breakup of those advances. There is, depending on whichever is the software will give a loan trial balance. Like if it is FlexCube, you will have a report called LN732, then CH632 for deposits and the CCOD files. So each branch has a CBS software which has a module. Now it's not necessary that you should be aware of all those features. You should only know, you should know how to ask a right question to the branch in charge. When you go to the bank, they will be giving you a system saying that you can play by whatever you want to extract reports, you can extract whatever the queries you want, you can download anything that you want, it would be given there for you to access and download. So it's very important, you need to know what is the right question that you will pose and you will ask it. Yeah. So before I move on to my advances classification, what we will do is first we will understand the advance classification, then we will move on to income recognition. So there is a loan cycle and a quick recap of yes.
Why it is called demand loan? The reason behind that, term loan considered as a demand loan, right?
Term loan is not considered. There are funded interest term loans, and you will be giving demand maybe a quarterly, maybe monthly. There are demands that gets generated. When it comes to your CCOD, you don't demand any of the repayment. You will only expect there are operations in the account, and that is why the classification is if the demands have been honored, and CCOD you have to operate the account if the operations are not done. So my NPA classification comes if my demands are honored or my operations are honored. That is why the classification also takes it. Okay. So from the LFR perspective, what do we comment on the advances? Whether they have been classified properly or not. It's equally important for you to know the asset classification, little behind background of how the asset generated, originated and moving. But I actually gave the answer. In the LFR, you will answer the asset into 4 stages. The first, which is on the advances, you will answer how well the before the sanction, which is pre-sanction, sanction, post-sanction, right? You will be answering into the 4 different categories. So what do we call pre-sanction as? Someone was saying something. Credit appraisal. So the review of the advance cycle, the first thing that you will be doing is credit appraisal. So slight change area. So you will be looking at credit appraisal. What does credit appraisal means? What does the credit appraisal would mean? This has little connection with our asset classification. I'll come a little later, but yes. What does the credit appraisal would mean?
To check the eligibility of
To check the eligibility of the borrower. Basically, RBI has given some norms and the banks themselves have their norms. So, this is the type of the loan, this is the security that we take or we don't take. If this is the security, this much percentage of the security that we would give the loan, and this should be your CIBIL score, and if my loan amount asked is up to 10 lakhs, it will be sanctioned with the branch. If it is beyond that, it should go to HO. So there is a process with which who has to do. Most of the time the branch manager is mostly a courier boy. You know, their job is to collect all these documents. There is a centralized processing cell. The documents are forwarded there and the processing happens there. From the LFR perspective, you will also have to check whether the credit appraisal is happening properly or not. Once the credit has been appraised, what's that about? Oh. Yeah. So once the credit appraisal is done, what is the thing that we will have to check? The sanctioning. So the documents have been taken and the loan has been sanctioned. So once the loan has been sanctioned, what is that we have to check?
Terms of the loan.
Terms of the loan, okay, what does that mean?
Whether the funds have been provided in line with the terms.
Okay, how the disbursement is been happening, whether it is to the borrower or it is the lender, okay? Very important is the other parameters that when do you create a customer account? When do you, let's move to regular business. When do you create a customer ledger in the books of accounts, let's say Tally?
After confirmation.
After
Confirmation.
confirmation. Let's say if a customer walks into the showroom and he is asking different products, different prices and everything, he is negotiating. Would you take a details and create an account? When do you do? When he confirms an order. In a regular words, if you get a sales order, saying that yes, I want this. So even in the bank, the many customers will walk in and ask the loan and other things. Okay, the documents will be collected, sent for processing, but post the sanctioning, and like pre-sanction is done now, at the sanction is when the customer account is getting created. From the purpose of again IRAC norm asset classification verification, it's very important that you verify how the asset has been created, the account has been created. For example, if the sanctioning terms that okay, 6 months moratorium is there. You can start paying the interest and principal after 6 months. So when I create an account, I need to set up these parameters into the system at that well. If that is not set in the system, then my classification will also go wrong. If the rate of interest has been defined as 8.025%, but I have entered it as 8.25%, system will start calculating interest at a higher rate of interest, right? So all the parameters that have been set are very important. And again, going back to the Tally example, if you create a customer a ledger master, just below the name there is one more field that comes.
Yes.
Alias. What is the purpose of it? You can do further classification, you do further reporting. Likewise, when an account is created, when a loan account is created, each loan will be you will having something like an alias. Whether this is a priority sector loan or not a priority sector loan. Let's say if it is a loan in real estate category, it will have to be further classified as whether it is residential borrowing or commercial borrowing. Even if it is residential borrowing, you will further classify it as whether it is a teaser loan or a regular loan. Because the Basel, the norms, the capital adequacy risk weight assets, the risk will change with the change in the classification. Second, the provisioning norm. By the way, there is a provision has to be created both for standard asset and not standard asset, which we call it as a performing asset and non-performing asset. Under a conservatism principle, where it is not, it's like very optimistic to say that a loan might get bad at some time, otherwise my loans are good. But you need to know the realistic value of the realizable value of your asset, right? Every business, some customers, there would be a bad debt. So considering that, there is a provisioning. And if you make a provision only to a non-performing asset, that means you are also deferring the provision. So how does a non-performing asset originate? It was performing at one point. Only from a performing bucket it moved to a non-performing. So it is also now requirement that there is a provision that needs to be created both for the standard, which is performing asset, and non-performing asset. Again, in a standard asset, you know if this is a commercial real estate, if it is a teaser home loan. So there is likely that, okay, like why do we call this teaser loans? Because they'll put a mailer saying that, okay, regular rate is 8%, but today we are offering home loans at say 6.5%. And they procure the loans. So because at that point in which you are giving the loan, maybe the EMI or the 6.25% seems to be little fair or better, and it could have been affordable. But 3 years later, when it becomes a regular rate, then the ability of the borrower might not be at the same ability. His cash flow would impact it. So the expectation is the teaser loans may become NPA at a much faster rate than the regular loan. So in the sanctioning and disbursement, it is very much important that you also check the parameters that have been set in the system. And if there is a security that has been mortgaged or given, the quantum of security needs to be given. By the way, visible to everyone? Yeah? Oh. So the mortgage, the value of the security needs to be given, because again the provisioning norms decide basis the security. So from the audit perspective, it's also important that you have to do the, as a procedurally, how are these parameters classified, which means the loans sanctioned during the year, pick up those cases and see the parameterization, is it correct or not, because there is one other question in the audit when it comes up is saying you will have to explicitly answer these parameters are correct. Given that it is the asset classification is by the system, if parameters everything is set properly, how the system missed something as classifying, not classifying as a non-performing. Now once this journey is over, what's the journey for the loans? Credit appraisal is done, sanction and disbursement is done, then review and monitoring. And what do we do in review and monitoring? When we say review and monitoring, what do we do?
Check the debits and credits.
Check the debits and credits. If it is a CCOD account, then you will see the operations in the account. And if it is a term loans, you will see whether the demands have been served or not. Okay. What else?
Stock statements are.
You obtain the stock statements periodically. What else?
The unit visits.
Physical inspection wherever required, if required.
Company has achieved projected turnover.
Company has achieved the projected turnover or not. Very good wishful thinking. Not many branch managers even be worried, concerned about it. Okay.
So renewal every year, so at that time audited statements would be collected.
Correct. So you start monitoring the account. So post disbursement, you look at whether the securities are okay. Once in 3 years, you need to revalue the securities. If the stock is the stock statement is there, the borrowers are into 3 categories. The first level, the highest level borrowers, the bank will appoint the auditors to review the stock statement periodically. One level below, bank expects the borrower to get the stock statement audited, certified by a chartered accountant, submit. A level below, bank would expect self-certified stock statement should be submitted. But in all the cases, every CCOD account, there shall be a stock statement. There is no case where you issue a cash credit account, underlying would be book debts or the stock, where you say, okay, next year when you come, you give, that is sufficient. No, that's not the answer. Yeah. So there is a review and monitoring mechanism for each type of transactions. Right? Broadly, this is the asset journey. See, I haven't got into the detail because today's topic is not the LFR. I'm sure in the LFR, against each there is a question, and how you will have to audit and answer it is what it is. So our discussion is on the IRAC and the provisioning norms. What we are going to cover is the history, is like how this IRAC has been originated, how the assets have to be classified on a financial parameter basis. There is a non-financial parameter basis also to be brought in for verification, that is to check if there is a stress in the account. So how do we verify the stressed account? And after the classification, how the income has to be recognized and how the provisioning has to be done. These are the things we will be covering, and there are RBI circulars that have been issued, so I will be covering those, couple of the circulars. What does those circulars mention? Lastly, there is a audit quality model that ICAI has given, and today it is expected that there should be a peer review, and the peer review requirement is going at a faster pace. As on today, if you have to see, even if you have to issue a tax audit certificate and the number of partners are more than 5, you need to have a peer review. Or if you are a proprietor but doing a listed company audit, then you need to have a peer review. Now, how does it relevant to the bank? Bank is a listed entity and you are doing an audit of the branch. Currently they have restricted that, okay, to the central statutory auditors the peer review is required. But very sure in the coming days, if you have to do a bank branch audit, even you should have a peer review certificate. Right? At the end we will touch upon some points on the audit quality model which has been issued by ICAI and how you will rate yours. So coming to the IRAC norms, IRAC is being with the banks as a normal how any company does the provisioning. It was not standardized up until 1992. Till that point it was a policy which was at the bank level. But then RBI stepped in and said, I think we need to have a policy that instead of at the bank level, it has to be a policy governing all the scheduled banks. So it started only for the scheduled banks. So today, in fact, there used to be different provisioning norms for the cooperative banks, scheduled banks. Over the time, everything has been aligned. So today, NPA means when you go to a cooperative bank or a Grameen bank, you will be talking the same language. It was different some time back. And these provisioning norms were reviewed time to time. like how we are moving to a journey of Basel 3, from Basel 1, Basel 2, Basel 3, even the provisioning norms were being reviewed time to time. Today the NPA norms have been like stagnant for almost 6 years. So kind of we have reached saying that okay, this is the NPA. Slowly there was a kind of tightness brought into the system. Yeah, so as I said, in 1992 till that the banks used to recognize their methodology of classification, whether it is good or bad, and because of this recognition there was no uniformity in reading the balance sheets and also ascertain the actual health of the balance. And for the income tax, again the provisioning the allowability was more to do with the actual write-off and not was on the provision. And even the interest which is pertaining to the bad loans, they used to recognize and provide. So there was little issues which were there. So to put this into arrest, there was a committee which was formed. Narasimhan, he was heading the committee, and under him the RBI had set up to have a proper unified reporting on the financial system of the bank, and asking them to make certain recommendations. And one of the recommendation was to have a uniformed policy for asset classification and income recognition. From that point we started using this word called IRAC. From that point we started using this word called IRAC. So since then the RBI started asking the banks to start using this word as performing and non-performing asset. And okay, question to you, what does non-performing asset mean? Is it a bad loan?
It ceases to generate interest.
So does it mean a bad loan? Is it asset is good or bad?
It's bad.
Yeah. So actually the nomenclature which was being used till that point was bad loans. And since then they coined this word saying that let us use the word performing assets and non-performing assets. And they said in case of a non-performing asset, we need to provide those assets. In a systematic manner, we have to provide those assets. Basis the security, basis the realizability. And recognition of income should be even more prudent. So let us not even recognize the interest. Earlier, till that point, there used to be a provisioning, but the recognition of interest was more way that they used to create a suspense account. Today, the suspense account is prohibited. You cannot even have a suspense account. You can calculate the interest in the back end. You can create a shadow balance in the customer master. But once an account becomes an NPA, you can't even accrue an interest and reverse or park it into suspense. You can't even debit the balance of the customer and park it into suspense. You may argue saying that tomorrow when he comes for collection, I will have to ask this money from him. That is an internal matter of yours. But you cannot inflate the balance of the asset. So the primary thing that you need to be very much sure is in the bank branch audit, after an asset becomes non-performing, there cannot be increase in the balance. In spite of an argument that the increase in the balance is not resulting into an income, it is parked into an other suspense account which will be nullified, or there is no impact in my income or any position. So RBI said no, that would also increasing your asset portfolio. Like if and given an apple to apple comparison, you can see a branch which has 1,000 crores, another branch has 900 crore assets. You will say that okay, this is a bigger branch than that, right? So the branch now has to talk always about the net asset, and the provisioning norms have been given a small percentage even to the good loans. Initially, there was no provisioning to the good loans. The provision to the standard assets was not there from the day one. There used to be only say 0.25%. Then slowly the categorization of the sub-loans happened and the provisioning for that also have come in. So they have also given guidelines to the branches while implementing these prudential norms, and we call this as prudential norms. While implementing these prudential norms, the RBI has given a guidelines. The guidelines are, firstly, the asset classification should be based on the performance of the advance. Now, we will moving out from usage of this word called good loan and bad loan. We will have to classify based on the performance of the asset. And there could be a performing asset which is completely unsecured, kind of maybe a risky or a bad loan, and there is a non-performing asset which is completely secured. You may say that 100%, listen, 100% of the loan is secured, but still it is not performing. So you cannot as a bad loan to that, right? So the classification has to be basis the performance, and recognition of income should only be to performing assets. So for a non-performing asset, you shouldn't even recognize, you shouldn't even park it to your suspense account. And if you have something interest which is recognized and it is unrealized, even this has to be reversed. You will have to account the income upon receipt basis. As and when you are receiving it, in that proportion you can accrue it. And the provisioning has to be as per the guidelines which is given by the RBI. And all these things should be done by the system. No manual intervention is permitted in any of these activities. The activities listed here should necessarily has to be system driven. So if you find any of this activity is not system driven, you have to adversely qualify. Not even the LFAR, it has to come into your main audit report. It has to come to your main audit report. Today, all the banks are in CBS, but I will tell you some of the inherent weaknesses of the CBS and where the things can go wrong. A question before I move to the next slide on your point number 4, where you will start accounting the interest only upon receipt of money. Let's say an account has become NPA in March 2020. We are in March 23. 3 years have lapsed. At the time when the account has become NPA, the outstanding balance in that loan account was 10 lakhs. The outstanding balance in that loan account was 10 lakhs. And for the ease of understanding, let's say rate of interest at 10%, which means every year how much he has to pay? Simple interest? 1 lakh. And let's say there are some, because it became NPA, they have to serve notices, they have to do periodical visit and everything. Every year, they, let's say they have their charges are 50,000 rupees. 3 years, how much? 1,50,000. So 10 lakhs as on March 20, 3 lakhs accrued interest, and 1.5 lakh towards various charges. What will be the loan balance as on March 23?
10 lakhs.
10 lakhs.
10 lakhs.
14 and a half.
It's not a performing asset, no?
11 and a half.
11 and a half. We have 10 lakhs, 14 and a half, 11 and a half. Any other answer? Bid is going on. So, how many of you say 14 and a half? 1. How many of you say 11 and a half? Okay, couple of you. How many of you say 10 lakhs? what about the rest? I'm only looking at what new answers you will create. Is there any other value you think can be possible?
If you have paid something amount, that can be.
Right now I haven't, don't change the facts. Now itself people are confused. If you are adding some more facts, that is my job. I'll do. So as on 31st March 23, because the asset is not performing, the balance in the loan should still be 10 lakhs. The balance in the loan should still be 10 lakhs. You cannot create a suspense account, net it off into current liabilities or under the loan account only and add 3 lakhs plus 1.5, 4.5 lakhs, making it a 14.5 lakhs minus 3.5. No, not permitted. It will still be how much? 10 lakhs. Okay. As on 31st March 23, now the borrower is coming and he is willing to pay 3 lakh rupees. He is willing to pay 3 lakhs. Okay. So now what will be the balance of the loan?
10 lakhs.
What happens to the 3 lakhs? It will offset with the
Interest.
interest or principal?
So the bank policy.
What about the charges? Can it not be 1.5 lakh charges and 1.5 lakh interest?
It should be.
It should be. What about reducing the principal?
It's a board policy which has to be seen.
Yeah. So the banks they can have their own policy. RBI doesn't step in here. RBI says it is your policy, wherever you want to recover and adjust that you can do it. While it will continue to be a non-performing asset, you can appropriate first towards charges, then towards interest, then towards principal. It is your policy. By the way, you can first appropriate towards principal, later to the interest and charges. It's your policy. However, no bank does it, because the moment I reduce the principal, the moment it is continuing to be under non-performing, my interest which I will be charging the subsequent periods will be on 7 lakhs and not on the 10 lakhs. So the interest that I would be earning is only 70,000. So they, as a policy, most banks adopt to recover the charges first. Why? Because they have incurred, they have paid money to the lawyers, they have paid money towards visiting the thing, they have paid money to the valuers. So all the charges are appropriated first, interest is appropriated next, the principal is appropriated at the last. So one other thing that you will have to check, if there is an NPA account as on March 22, as on March 22 it is NPA, as on March 23, should it continue as NPA or no?
Not necessary.
Not necessarily. When it will not be NPA?
The entire amount.
If yes, regularized. Can the balance come down? If he has done some payments, the balance can come down. Can the balance can go up?
No, sir.
Can the balance in an NPA account go up? It's NPA then and NPA now. Can it go up or no?
No, sir.
Anyone saying yes? Okay, I am saying yes. Now given that I said yes, accept it, there is a chance. Now tell me what is the possibility? Restructured, I am not going to give another loan, it's already NPA. I can only defer his thing, but still it will be an NPA. And I will not recognize any interest or principal. Trust me, there is a possibility. It was say 10 lakhs, now it is standing 11 lakhs. Yes, very well said. I have regularized, let's say I have a OD account 15 lakhs, I became NPA, when it was standing at 10 lakhs became NPA. During the year I have regularized, I made good everything, or if it could be anything, I have regularized. Then after 6 months, after 9 months, then again it started behaving erratic. So it for the last 3 months, like till December, very good, operational, effective and everything. Again from December, it could become an NPA. So after regularizing, I would have given a fresh sanction. Again it has become an NPA. All those possibilities would also happen. So you need to check where is the NPA position. So it is one of the guidance note principle in the by the way, please download the background material issued by ICAI. It would be at the start, when you find it, it is bulky, that's fine. Understand the index, at least some 50% of those pages would not be relevant, but the rest will be relevant at different point in time. So during the course of audit, when you encounter that particular area, you can just filter it and you will quickly glance through and you will get an answer. Okay. So let's now start how the advances are classified. Can you give me the classification advantage? Yes.
With respect to the, as you mentioned that if there is any unrealized interest, it has to be reversed. So
When I say, I didn't say reverse. If an account becomes NPA, yes, you have to reverse, and it might be a prior period item also.
So how can it be have an unrealized interest when we are classifying it as an NPA if it is more than 3 months? So even the circular says it is even 1 year old or something. So how can it be unrealized interest for 1 year old, where 3 months, when once it becomes due on 90 days, then only we will reverse it, right? So how there will be outstanding interest unrealized?
Yeah. So circular says the moment, in fact the norm says the moment an account becomes an NPA, do not recognize any interest, right? And what happens to the interest that you have recognized all these days?
That's what I'm saying. If that has not been realized, it means the account is becoming an NPA. Only to the extent of 3 months, if it is unrealized, that I will get reversed.
Yeah.
If it is of 1 year back, there may not be a situation.
What if it was not reversed earlier?
Only in that case.
Yes. And what if it was error in the system parameters? The sanction terms were wrongly set. You have set the one parameter, but system the 3 months norm should have elapsed long back, but the system is not showing as let's say there is no moratorium given, but in the system you have set 9 months moratorium, which means 9 months he doesn't even pay also, you will not touch that account. Then you realize someone has wrongly entered a value into it. So all that we have to see as on the date of NPA, whatever is the unserviced interest has to be reversed, and that could be most likely 70% of the cases it is the last 3 months, or it could be an earlier periods also.
Even the charges also has to be.
Everything, unrealized incomes, charges and interest both needs to be reversed. You have a question?
Sir, you told us that NPS could probably increase, right? There is a possibility that it might increase. So when that does happen, shouldn't the credit appraisal of the bank, the process, be brought into question? Because you already know he is a defaulting borrower. Moreover, you have increased the sanction. So should we not bring into question the credit appraisal process?
You only have to see whether the credit appraisal was done properly or not. See, you need to first get out of this mind. NPA means it is bad. NPA means it is not performing. Every businesses have their own phases. NPA doesn't mean it will be a write-off, it will be a bad debt. It is not performing at this point. When account becomes into NPA, it doesn't mean that it is end of the cycle. Like, so no more credits to this customer in the lifetime. No. There will be many situations, you will be coming out of it, you will be getting into it. So you need to get into your mind that NPA is not bad. It is just not performed. Yeah.
So
Okay.
reversal of interest in the charges, is it automated or it will have to be done manually?
Last line. Last line.
Should be system driven, but does that happen?
It should happen. Okay. So question is, how do you classify advances? Give me some classification. One thing we just discussed. Performing, non-performing. Then? No, standard and non-standard is part of performing, non-performing. The other classification. Fund-based, non-fund-based. Very good.
Priority non-priority.
Priority sector, non-priority sector. Secured asset, unsecured asset. So, while you sign your balance sheet, the same value you will be signing under these categories. When you sign the balance sheet, the same value you will be signing under these categories. Now, this is a classification derived based on the parameters that have been set. It is equally important that one has to do the verification of this classification. You cannot say the verification of classification of parameters is not my job. I will restrict my scope to performing and not performing. Answer is no. When we say asset classification, it also meets that how well you have classified. There is a requirement that RBI says that so much of the borrowing should be lending to be given to priority sector. And priority sector means agriculture, exports, MSME, housing, education, renewable energy, right? These are priority sector. So when I have given a loan to a borrower, a term loan, it's a term loan, but I still have to further classify whether priority, not priority. I need to classify whether that loan is a priority or not a priority. Like as you rightly said, the priority could be MSME, the priority could be education, renewable sector, agriculture, housing. These are the sectors given. And the RBI also says, basis the adjusted value of the net bank credit, they have to give. For example, 40% of the adjusted net bank credit should be to priority sector. So the bank cannot say that no, I will not be taking any risk, I will only give CCOD, I will only give business loans. I will not give loans to education sector. I don't know whether he will qualify or not. After qualifying, he will go to London. I cannot go cash behind him. So you cannot say that I will not give these loans. It's mandatory. You cannot say that agriculture, the government will sometime come and say that no, I will waive off all the interest, and considering that statement, no farmer, even if he has money, he will not come forward to pay interest. There are challenges in the priority sector. But the banks cannot say, I will not do the lending. So they have said multiple categories. In fact, if it is a cooperative bank, a percentage. If it is urban cooperative and a rural cooperative bank, a percentage. So likewise, they have set the various percentages to the lending. And what do you mean by adjusted net bank credit? Or what is net bank credit? This sounds like a complicated word. Now if I replace this with 40% of my loan portfolio. Now sounds simple. So if I have given 100 rupees loan, 40 rupees loan to priority sector, 60 rupees you give wherever you want to give. Clear? Now, what can go wrong here? And by the way, no one, you should think on the face of it, do not think that everyone is good and everyone, it's a system, everyone has their hidden mottos, hidden agenda. They want their share price to go up, they want their shareholders to look good, they want the board to be good, looking good. Or a branch manager, he will call you, I'm sure if you are banking with one bank, at least in the quarter ends he will call you, please tell your customers to give some deposits or ensure that you do not repay this loan, let it be there. Everyone has their targets to meet. Now if I have a target to meet, I will start giving all the loan which is there in Pina. I will say Pina office is Pina, that client is 15 kilometers from my place, so it's far off. Let me put that as priority sector or a rural loan. You can do classification. It's still a term loan. Priority sector is also a term loan, non-priority sector is a term loan. So from your perspective, the NPA norms is same for the priority and the non-priority. So most of the time we don't spend time in actually extracting this information. All that we will be interested in looking at is, okay, give me list of customers, give me what is the ODS on the balance sheet. We don't ask for, we don't spend the time in looking at the what is the further classification. And there are GL codes that have been mapped. So your job is also to ask these questions. And mostly all the CBS, there are various reporting thing. In fact, maybe in tomorrow's class, maybe Sharan might show you which report to access and download it. But you will have to download the information, see how the classification has been done. Like if I say, you will be signing, if the branch has advance of 200 crores, 200 crores you will be, in one certificate you will sign 200 crores, another certificate you will sign 200 crores. You will see that, okay, certificate value matching with my balance sheet advances, okay, audit done, and you will be signing. In fact, couple of certificates we don't even know what we are signing, but we'll end up signing, especially the capital risk weighted asset. Okay, capital adequacy, that certificate which is signed, the balance sheet total will be something. If I am saying 200 crores as my asset, what is my risk weighted assets? If I have to equate all the assets, what is my weight? That matters a lot, right? Why are we moving to this journey of the Basel III? I need to do an apple to apple comparison, right? If a bank has 1000 crore deposits, another bank has 800 crore deposit, which one is more riskier? 1000 crores. Because?
You can lose more.
Who can lose more? Customers or the bank? Bank has an obligation, deposits, bank has an obligation to pay. So which is risky? Keeping other parameters at the same.
No, the more money they have, the more they will lend, and it's more riskier.
More money they have, they are lending more, so more riskier. So finally, what are they saying? Which bank is risky?
Bank with more deposits.
Bank with more deposits is more risky. So when you are doing any investment, be careful. You ask bank, if you don't have any deposit, then I will give the deposit. Okay, adding one more parameter. This bank which has 1000 crores deposits, the maturity period is 5 years. Due for maturity in 5 years. The bank with the 800 crores deposit has a maturity period coming in 6 months. Which is more riskier? 800 crores. Because the loans they have given, they might not get the recovery that fast. Correct? So there is this, the risk is calculated based on the time period. I also need, when I have to do an apple to apple comparison, I need to see a risk weighted asset rather than a plain value of the asset. So I need to adjust the risk and the time value of my repayments in 3 months, 6 months, 1 year, how the ability of the bank to service matter. A working capital will have a different weight, a term loan will have a different weight. Term loans beyond 5 years have a different weight. So the balance when you are calculating, system will generate all the term loans outstanding value beyond 5 years is so much, less than 5 years is so much. So that is where your audit on those classification also matters a lot. Okay. So there is a formula how the adjusted net banking credit is derived. Not any relevance to us. It's only an academic understanding. Just for your basic understanding, my adjusted total portfolio, 40% of it priority sector, and this change, any numbers that you are seeing, it will change time to time. Now let us more look into the asset classifications from the IRAC perspective. So it is classified into what category we have seen? Performing and non-performing. Let us start understanding with the performing. The assets are classified as performing and non-performing. The performing asset is further classified into SMA 0, SMA 1 and SMA 2. SMA 0, SMA 1, SMA 2. After SMA 2, it would become NPA. After SMA 2, it becomes an NPA. SMA means special mention account. So be watchful. Be watchful. This might be a potential NPA. At a later point in time, this might be a potential NPA. SMA 0 means the principal or interest payment either fully or partly overdue for a period up to 30 days. SMA 2 overdue beyond SMA 1 overdue beyond 30 days but less than 60 days. Overdue beyond 60 days but less than 90 days is SMA 2. After SMA 2, it steps into NPA. Clear? Now, from the audit perspective, you have to see if there is an asset lying as NPA as on 31st March 22, and if that is lying as an SMA in this year, you have to do a special focus on it, because an asset moving from a non-performing to a performing, it is not just you bring if you regularize the overdue, that's not the criteria. Moving from non-performing to performing is 100% realization of the overdues. There should not be any due while I am upgrading the account. So if there are no overdues while I am upgrading, because they can also tweak the parameters of the system's parameters can be tweaked. Only from last 2-3 years, everything is automated. Earlier, even though there was a CVS, they used to run an external application which used to do marking of the NPAs. These marking of the NPAs are updated back into the system. See, I just need to flag an asset as an NPA, right? This flagging was done externally till 3-4 years back. Now it has been brought integral to the system because the RBI mentioned it. The recent circular which has come to urban cooperative banks also, where again the banks are classified into 4 tiers, tier 1, tier 2, tier 3, based on the deposit size. They have also given in a phased manner. You cannot do anything classification outside the system. The classification should be in the system. Even though it is system driven, it is not a manual intervention, it is system driven, but such system driven should be within the system. It cannot be outside the core of yours. This is the classification with regards to the performing assets. The non-performing assets are classified as substandard, doubtful and loss. Substandard asset means an asset is not performing for a period of 12 months. The 12 months of its non-performing period is called substandard. Once it crosses the substandard period, we will start calling it as doubtful. So it continued non-performing beyond 1 year. Beyond 1 year. So after being substandard for 12 months, we call it as doubtful one for the first year. For the second year and the third year, we call it as doubtful 2. Beyond 3 years, we call it as doubtful 3, D1, D2, D3, short term 2 category. But it is a doubtful asset. A loss asset, wherever you think that you cannot collect, it becomes loss. Now, a loss not necessarily after X number of years of doubtful it will become loss. No. An asset can become loss straight away from a standard asset to a loss. It can jump. For example, a machinery, I have given a loan to a factory. Suddenly there was a fire in the factory and the entire machinery assets have been burnt and there is no insurance coverage or no adequate insurance coverage. There is no other collateral which is there, which is given. And the borrower said his inability to pay. It straight away moves to loss. Someone has been trying to make good with the account and he declared himself as insolvent and IBC proceedings are happening. The loss can occur and classified any given point of time. Clear on that? There is another word called a technical write-off, not applicable for the bank branches, but you need to also know sometimes the again this happens mostly in the NBFCs and the cooperative banks, where what they will do, they will keep the asset they will state it as an asset for the purpose of the books of account, but they will do a write-off. So it's called kind of technical write-off. In case of a non-performing asset, you will not downgrade your portfolio. You will not reduce your portfolio. If you are 100 crores is the asset, your asset value will continue to be 100 crores. You will not reduce the value of your asset. The provisioning which you are doing is applied to the asset. When you say the words, generally when in the bank to compare and understand, they use this word called gross NPA, net NPA. Gross NPA is out of total 100 rupees, how much of it is non-performing. Let's say 40 rupees non-performing, 60 rupees performing. So 40% of it is gross NPA. Out of this 40 rupees, let's say if I have 15 rupees provisioning done, that means net NPA is 25, right? So the words used are net NPA, gross NPA. My asset will continue to be 100. That is why when you say net NPA 25%, that means 25 over 100. So your portfolio, till you write off the asset, it will continue to be showing as the asset value in the books of accounts. Clear on this? This classification, both performing and non-performing. Now let us look into the terminologies of how an account becomes an NPA. When do we call this? When does an account becomes non-performing, or when do we call this as not a performing asset? There are various types of loans. Against each loan there is a different category, a different norm that is set that we need to see. Starting with, majority of the loans are term loans. Now I am not talking about priority, not priority, secured, unsecured, nothing of those category. A secured could also be a term loan, a priority could also be a term loan. Now we are looking at whether it is a term loan or a bills purchased or CCOD, what type of loan it is. So if it is a term loan, if their interest and or principal installment, both, so all the demands that have been raised, if they remain overdue for a period more than 90 days, then it should be treated as non-performing. The exception is moratorium period. If I myself have given a moratorium saying that for a period of 6 months, you don't need to repay, okay, where the commercial operations have to be started. Okay, if the commercial operations have to be started, then I will say that, okay, period of 6 months, okay, you can start paying after you set up your factory and you started running the business. I will continue to charge the interest For 6 months I am charging the interest, not even a single rupee has come into the account. Still it will not be classified as NPA. It will be classified as NPA only when something becomes due. Alright? In case of a bill, if a bill has been purchased or discounted and it is remaining overdue for a period of 90 days. Here we have to use the literal word 90 days. It is not 3 months. And there has been no change in the provisioning norms or the circulars by RBI in any of the last year. But however, they have brought an attention to one circular and they have changed the wording, not even changed the wording, they have highlighted the wording saying that when we say 90 days, it is not 91st day, it is end of 90th day. It is not 91st day, it is end of 90th day. And banks have this beautiful concept called SOD and EOD. At the start of the day, they will run an application to run all the engines and the values to be progressed, and end of the day they will run an application to close the balances in the application. They have said the policy of the bank should include on the 90th day when they run the EOD, the NPA should be applied. Do not wait for the next day. It's like if 90th day falls on 31st March, it doesn't mean it will become NPA on 1st April and it is standard on 31st March. It is NPA as on the 31st March. Now why I am bringing this is RBI has brought out the circular highlighting this position, this portion. Maybe they would have observed that there is like kind of window dressing happening and people are trying to make good till the end. So they have said that do not wait even till the next day, and when you are running the end of the day, this has to happen. So this is one thing you will have to pay a special attention, because given that RBI said that you have to take care, it should be doing in the end of the day process and not in the next day process.
For this, any parameters are to be checked or it will happen automatically for us?
Okay, now for us to check, how do we check? A very good point. Between the previous year in NPA and this year NPA list, branch will give you, should ask that, they will give you a list. Do you expect the loan accounts will be the same? Very unlikely. If they are same, then you should have bigger doubts, right? So there might be some addition to it, some deletion. So assets would have been moved in, some would have asked for one-time settlement, settled and closed, could have. Now an asset, something which has moved in, you should first see what are the dates of the NPA. NPA should not be marked on the month end. It should be marked as on the date when it became due. Pick one account. Take the ledger statement of it, take the sanction ticket. According to you, when it stopped paying the interest, look at that. Compute 90 days manually, and they would be marking NPA date in the system. See the marking of it. If you find the deviation and you are not expected to recompute everything, you can straight away qualify saying that this is the observation and this should be the date of NPA. System is calculating and applying at this date or this rate. Looks like there is a procedural lapse.
Some 2-3 accounts need to be checked, otherwise
You have to check 2-3 accounts. You have to check OD account, you have to check one agri loan, you have to check one term loan. You have to check, satisfy the process. Today, most of the, there is a technology upgradation, there are a movement much forward happening. Today, most of the banks have moved into a real core. Now, in a core banking session, I used to generally explain how the core works. Again, to give a simple example, let's say Tally as an accounting software versus QuickBooks as an accounting software. In QuickBooks as an accounting software or Zoho or RealBooks or any cloud application, you wouldn't be worried whether am I using the right version of the software or not. Correct? But in Tally, when the books comes, Maybe it is in ERP9, whether it is in Prime, whether it is with audit log, without audit log, we don't know. You will have to open it. The moment you will say, okay, it will say it has to be upgraded and rewrite the books, which means some patch needs to be updated. Even in the core banking, again till last 4 or 5 years, most of the applications are different servers, different applications. There used to be server within the branch. The data used to get processed within the branch server, there used to be batch transactions used to get updated. But today everything happens in the core, one simple server. Again, when we say in the core, you might be seeing a browser as an interface. But this browser is eventually hitting somewhere in the server, right? There is a server which is, I am connecting to that system. So I am using a browser as a medium to process it. So when branch 1 opens and branch 2 opens, both of them are talking to the same application. So very unlikely you will have to do this batch processing or updating or the patch updating of the software. Having said that, the CBS that have been used is not developed by the bank themselves. 70 to 80% of the software, the banks using the CBS is developed by a software company. Like Infosys has one software, Wipro has a software, iFlex, the FlexCube, the older version, they have a software. They have different flavors of the software. So maybe in one version of their software, manual, another version of their software could be automated. There you will find an issue. If the bank themselves have not upgraded the next patch of the software, there would be an issue. But test, you cannot say that, see, this is a bank, there are so many branches, why will they do this mistake? Nothing of those notions. You are signing it. So as a peer reviewer, I'll ask you this question. Okay, how did you sign this? You need to give me only answer that how you have signed it. And this common question that comes up, that branch manager comes for a plea saying that I don't know, okay, it happened, can you execute, all those things. Now firstly, with my experience, let me tell you that branch manager, maybe you are seeing him first time in your life at that point. After 10 days, very unlikely you will see him. Okay. And even if you see him, you may recognize, he may not recognize. So you also need to be doubly sure if you are doing a favor, whom you are trying to do the favor. Okay, and why you are trying to do the favor. At what cost and what risk. Those are things you need to keep in your mind. Yeah?
So
next.
With respect to overdue date, if it is due on 31st March, for example, so whether like 31st March or, as you said, is the end of the day has to
End of the day.
even it applies for that.
So, because if it is more than 90 days, it has to be marked as NPA. The next day, when the day has started, more than 90 days.
Means that due
So-
on 31st day should be considered also for as a day.
Correct.
That means if 31st is a due date, so 31st is also should be considered as a day
As a day.
for calculating 90
Absolutely.
days.
For calculating 90 days, we should not exclude it. We should include it. In fact, most of them have actually taken this advantage. Even we were like saying that, okay, 90th day is not over. So RBI said there is something called end of the day. End of the day, 90th day is happening. So next day, if you are calling it as NPA, the next day you should call it as NPA, but you are waiting for end of the day next day and you are actually taking a benefit of it. So that is not the intention of the law. So RBI this year categorically brought out the circular saying that 90th day means 90th end of the day. That is the day. You cannot go to the next day. This is the area you will get things, because banks would, it's like we presume, okay, RBI said bank would have adopted it, should have adopted it, but you should check and see whether they have adopted it.
It happens with SMA accounts also, like 30 days, 60.
It happens to all the accounts. Next, the classification should be, another thing RBI also said is that you need to have a specified due date. Earlier, the sanctions used to be silent about specific due dates. and whenever there was a silence in the sanction date, the system used to be presuming as end of that month. Let's say I have sanctioned the loan on 28th of January, and every month you have to pay 10,000 EMI. Now every month, most of the time system used to, when the parameter is not set, it used to be set as end of the next month. It used to become 28th February the next month. Next that it used to become 31st March. It used to be the end of the month. RBI said it is not permitted to have an unspecified dates. You might still now find this during the year audit if there were earlier loans. If there were earlier loans where the dates were not set, the system will use to apply end of the calendar month. That is the logic of the any CBS which used to run. Again, this year you also have to download a report saying that I want to see the due date of the loans. It will be one text file, it will be running. So you just open the text file and see if the due date, any of that is showing as blank. That indicates that okay, this loan has been sanctioned some 2-3 years back, where the due date has not been set. See, bank audit, gone are the days it was only I will be checking NPA and trying to issue MOC. MOC is also, even for this non-marking of this MOC would come up. Wrong classification between priority and priority class NPA would come. So the MOC would come for multiple wrong classification of the parameters. So the two things which you have to be very sure is there is a specified due date and the NPA date ends on 90th and not 91st. Yes, madam.
That circular, the specified due date.
RBI circulars, I will come. So I have listed all the circulars. I will share you the circulars. Clear on the term loans? Let's move to agri loans. Agri loans are classified into two types of agricultural loans. One is a short duration crop. Second is long duration crop. A loan could be a short duration crop. A loan could be a long duration crop. Short duration crop means the crop season is less than a year. Long duration crop is crop season is more than a year. Who decides the duration more or one short or long?
Committee.
Which committee?
SPA.
SBA.
State bank.
Each state.
State level.
State level. Yes, exactly. So there is a committee state to state, right? So a state to state, depending on the conditions, depending on types of crops, because not all state, like in the state of Assam, you will not grow wheat, right? It's a tea estate. In state of Rajasthan, you will not grow tea. Depending on the weather conditions and everything, where types of crops that are growing in that state and the region, the state level committee decides, the banking committee decides this will be short duration, this will be long duration crop. Okay. Having understood this is a short duration and long duration, they will also say crop season. What is the season of that crop? And what will be the season of a crop? What will be the season of a crop?
It differs.
Depends from crop to crop. So there cannot be one set of the period for the crop. So the crop seasons are defined. Basis the crop seasons, so you now know if the crop season is beyond a year, it is long duration crop. If the crop season is less than a year, it is a short duration crop. Now I have given loan for a crop. I have given loan for a crop. Generally, the installments are due for that crop season to be completed. Now, I have not repaid in that crop. Wait for the next crop season. Next crop season also it is not paid. Earlier, considering that norm of beyond 90 days, on the 91st days, when they said beyond 2 crop season, in the end of 3rd crop season, if someone has not paid, then I will classify as NPA. No. 2 crop seasons. If you are short duration crops, if any amount remains overdue for 2 crop seasons, let's say 3 months is a crop season, okay? If 2 into 3 months, this is like 6 months not paid, on the end of the 6th month, you will have to classify it as NPA. You don't need to wait for the third crop season to get over and see I'm still in the third crop season. No, end of the second crop season you have to do. And if it is a long duration crop doesn't mean that I have to still wait for 1 year. It is again each crop. So when agricultural loan is given, a crop loan, you have to mark in the system what is the crop and what is the crop season. So if the principal or the interest, the installment principal or the interest remains overdue for one crop season, and the crop season could be 1 year, could be 3 years, whatever is the crop season that has been defined and set. If in that crop season, if the principal and interest is remaining overdue, then you have to classify it as NPA. Now, who will do? System will do. But if I do a wrong parameter settings in the system, if I do a wrong parameter setting, like I am giving low, let's say this belt, tomato growing belt, and the crop season I have set it as mango. System will not classify as NPA. You will keep seeing that, okay, overdue, no, it will be showing as not overdue. So now you know where people will play mischief. Now if you point out, oh, okay, that idiot, that accountant cashier who was creating this, he made a mistake. So it is very important. Trust me, system will not do a single mistake in classification. What makes mistakes is people. Error is human. That's something we should know. Who is creating that customer account? We, a human being, is creating. Intentional, unintentional errors will come up. Classification a loan into priority sector because he has to achieve target. Classifying into a long duration crop so that the most of the crops are going to become NPA. Now, not that these are like a bad loans. Two specific reasons. Crops in India are heavily dependent on the rains. Now, if there is a bad fall, over rains or a drought would have also caused an issue. Another is vote bank. Most of the times the policies would come up and saying that no, the agricultural in this region are suffering. We will promise the farmers up to 1 acre, I will waive off so much loan if I win. Now I will have to wait for him to come to the elections, completes, and if he wins, then every time when someone goes, no, so nam loan mannagutte, so we will wait. Someone will come and take care of our loans. So there are two main reasons, especially in the farming sector, for the overdues which are getting mounted. So you got to be firstly emotional less. If it is NPA means NPA. It is not a bad loan. We are not saying that okay, this guy has killed this bank or in his lifetime you will not get loans. Nothing like that. This is an NPA. You are marking it as NPA. That's all is your job. In fact, that is what you have been asked for doing it. Now what happens is, if there is a drought, can I apply this? If there is a natural calamities.
You need to see the policy again.
Notification.
What is the change in the policy?
Not the policy, it's the government. RBI has to come out.
Firstly, you need to establish there is a drought. Now, it's not state specific, it is the zone and the region specific. In those regions, it will be declared as this is a drought by the respective states, saying that okay, this is a drought hit area this year, or there is a calamity this year. It would be declared. It could be no rain or heavy rain washing off all the like some suddenly floods have come and the crop has gone. There is a calamity which is declared for each zone. Once that is declared, can I classify it as NPA? Can I classify it as NPA?
No.
Yes or no?
Yes, unless they apply for
No.
They have applied for?
restructuring.
No, we cannot.
So the word you need to look for is in my system. I have to say okay, I am restructuring this loan. If restructuring is not done, then it has to be classified as NPA. Earlier, there used to be lot of papers. In fact, they will get all the papers, including stock statement. They will have some 5-6 stock statements ready. Like you say, stock statement is missing. Which quarter? Okay, previous quarter, this quarter. They will give you, put a date and give. Okay. So the loan has to be restructured. So when an agricultural loan, let's say a short duration crop, when there is a calamity, the basis the crop loss, the moratorium can be given. If the crop loss is expected up to 50%, then it is 33 to 50%, not even up to 33 to 50%, then I can extend the repayment for 2 years. Not 2 crop seasons, 2 years. It's a policy. And this is up to. This is the maximum period in which I can extend the moratorium. Now, in this moratorium period, what I can do, I can convert my principal and overdue into a fresh term loan. I can do it. I can insist on bringing additional collateral. I can do extension of it. When I do this, my repayment terms change and I have to look at the classification basis the new terms. Not this classification happens on the March balance sheet date. It might have happened in say December. It has happened in December. And I have said, okay, it's a short crop. I have extended, let's say 5 lakhs. Now this 5 lakhs I am making it into a repayment of 2 years on a monthly installment. Possible. Generally, these crop loans are expected to be, we call the KCC, Kisan Cash Credit and other, expected like a bullet repayments. So they use it for various things. Once the harvest is done, it is closed or renewed. So the expectation is it will be closed in bulk. Now the repayment terms, if I am saying that okay, I am extending payable so much in crop season 1, crop season 2, crop season 3 could be a term, or every month pay 30,000, 40,000 X amount to equal it in 2 years could be a term. So you need to now apply the provisioning norms based on the revised repayment reschedulement after the moratorium has been given, and that could also include waiver for first 3 months. All of those things can come into the picture, and this is a decision which will be done at a branch, not at a branch level, generally at the head office level, and it is passed on only for the implementation. So you will also have to ask, are there any crop loans in the branch? Are there any reschedulement or rephasement happened? Basis a natural calamity. In the last 1 year, there is no circular issued by RBI on rescheduling. During the COVID period, we had 2 restructuring circulars that have come, permitting a loan to be restructured and not to be classified as NPA. However, a higher provisioning was done. But in the last year, there is no restructuring permitted. The moment you identify a loan as restructured during the year, it is likely that okay, it is a wrong circular has been applied. If a loan is restructured, you have to necessarily classify it as NPA. You have to observe it for a period of 1 year, barring these permitted restructured loan, which is their crop loans. Other than this, if a regular term loan, a customer is coming and asking for rescheduling, whatever the words you call, additional moratorium, restructuring, beyond the original sanction, if there is any change in the sanctioning terms, it is called restructuring. Even if the account is good, you have to downgrade it for a period of 1 year. You have to observe that, saying that okay, you have restructured, is everything good, is everything happening good. You know, restructuring will not happen saying that a 5 years loan I am making it to 3 years. It's like today RBI permits everyone to do advance payments and without penalty. Restructuring is A 5 years loan, I am making it into 10 years or 7 years. In those cases, even the operations in the account is good, you have to wait, you have to do an observation period of 1 year, and that is where you have to do a downgrade. If a long-term crop loan is rescheduled, that means if there is some damage that happened because of the natural calamity, you also have to see that if there shouldn't be any willful defaults. You have to see if there shouldn't be any willful defaults, and if you are satisfied, they can do the restructuring. The maximum period for long-term crop restructuring is up to 5 years. In the short-term crops, crop loss up to 33 to 50%, 2 years, more than 50% is up to 5 years. In a long-term crop, since the crop itself is long-term, any period which is determined by the bank policy, but up to a period of 5 years. Then other, sir, is the tea ready? Let me know so that. Then the other things that you need to look at it. See, generally security transactions will be very less, but if the liquidity facility that is given and it is remaining outstanding 90 days would come up. Derivatives, you have to do mark to markup, and no branches are not permitted to do lending for these transactions. Generally there are specialized branches which does this transaction. Credit card is something you will start finding in most of the branches, because today the one is there are frauds that are happening on the card related transactions. And sometimes the banks also permit a little overdrawn, and that is why we call it as the CC overdraft. It's like my SB account, but sometimes you permit to go beyond the limit. You draw over and above the permitted limit. Now, when something becomes loans have been given, so how do I check this 90 days period? Every time when you get a credit card statement, you know in the credit card statement there is something called minimum amount due. If that minimum amount due is not paid for a period of 90 days, then these credit card accounts have to be classified as NPA. Yeah. Then we move to cash credit accounts. Cash credit after 10 minutes. Okay. Yeah. Cash credit account.
What is the second point on the credit card, under credit card?
Oh. Yeah, so the reporting of the credit, today everything is SIRC, CKYC and CIBIL. These are kind of the terms which every bank will have. There has to be a real-time integration and information exchange that needs to be given. So the credit information of this has to be reported and considered only after the 3 days, because a credit card use attracts the highest rate of interest. Generally a credit card defaults are charged at 36%. Okay, and from the due date the banks are also expected to wait for the 3 days before invoking those penal interest and other charges. For the credit card accounts, for the cash credit accounts, the term used is out of order. If the account is not in order, because for cash credit account there are no demands, there is nothing due to be paid. It is supposed to be operational, it has to be operating. If the operations in the account are not happening is when you will call it as out of order. So the out of order has 3 things that you need to see. If the outstanding balance is continuously excess of the sanction amount or drawing amount for a period of 90 days. If the outstanding is excess sanction amount or drawing power for a period of 90 days, point number 1. Point number 2, if there are no credits in the account for a period of 90 days. Point number 3, there are credits, but such credits are not sufficient to take care of interest debits at least. Then these accounts have to be classified as NPA. Let's look at what is the inherent weakness in the CBS for doing this. Can the CBS know Like let's say I've sanctioned 25 lakhs working capital against the stock and book debts. Will the CBS know what is the drawing power? By the way, drawing power means the power I can draw the money. When a loan has been sanctioned, the sanction amount is the drawing power. The terms of the sanction generally would be, let's say, 60% of the stock or say 75% of the paid stock, which means the closing stock value which is valued at cost less creditors, because creditors means I have not paid for the stock. That means paid stock, 75% of the paid stock, and I have already sold this stock. Instead of stock it is lying as debtors. 60% of the debtors is the amount I am willing to fund you. The sanction terms will say certain amount that bank is willing to fund. So this drawing power has to be drawn every quarter. Every quarter the drawing power has to be ascertained. Basis how much is the paid stock, how much is the receivable. So this has to be ascertained once in 3 months. How do it ascertain? Borrower will be submitting those statement. Basis those statement, you manager will compute it, enter into the system, saying that the drawing power is this. Now, let's say my loan which I have given, let's say 25 lakhs is the CCOD that I have given, cash credit, and the stock statements which have been submitted, let's say he has submitted only debtors, there is no stocks, and the condition is 60% of my debtors would be funded, and he has given me debtors of 30 lakhs. So what would be my drawing power?
Month on month or month?
Quarter.
18
lakhs.
18 lakhs. What is my sanction amount? 25 lakhs. But my drawing power is now 18 lakhs. As on that day, my account was operating at say 23 lakhs, 24 lakhs. I am necessarily has to bring down the operational balance of that account below 18 lakhs. Even though the sanction limit is 25 lakhs, I have to bring down the value of my transactions sub 18 lakhs. If I am not doing it, and if my outstanding is more than 18 lakhs for a period of 3 months, it should be classified as NPA. It should be classified as NPA. Is that clear? Any doubts in it? Clear? Now, how will system know that 18 lakhs? We have to enter it. So, what if someone intentionally, unintentionally enters a wrong figure? Benefit of doubt, let's give them. So,
they don't enter many of the times. The same
they don't
DP
enter
continues.
many of. What should happen to the drawing power if they don't enter?
Same
Zero.
DP
Zero.
continues. Previous.
Same DP is continuing, which should ideally be 0.
0.
Correct? So, once a stock statement is given, the strength of that stock will be for 3 months. That means, as on 31st March 23, I have to see 31st October 22, did I get the stock statement? Because the strength of that will travel till Jan. The strength of it will travel till Jan. End of the Jan, no stock statement, it is drawing power is 0. So overdue from Jan is anyhow not within 90 days. So at least that much you have to ensure. Yeah. So value that is entered, you need to also do a test check and see on what basis they are entering the value here. You have to randomly pick some cases and see the value that has been entered. What is the basis of it?
Can we take out what was the DP updated month like that?
Yes, yes.
For the take a report.
Okay. Let me tell you and listen this very clearly. What is not possible in the CBS? What is not possible in the CBS is whatever you cannot imagine. Like if you ask this, I want the drawing power that you have. I only want the CCOD accounts. This is when did you update the drawing power last? I want this report. Else I cannot finish my audit. You have not given me the By the way, one of the point in your audit report, and the necessary information to conduct the audit has been, information has been, and satisfactory explanation has been given. We will say like the standard terms and conditions checklist, we come tick and next. Right, and how do you prepare an audit report? Control C, Control V, change the date, change the branch name, it's done. But the necessary information which is asked and not given, you should ask and you should say this information has not been given, hence I cannot comment on timely updation of the drawing power. So what is more important is you should know what you should ask.
Actually, they maintain a manual register also.
No, it is necessary. Today, core is core. It has to be in the CBS. Just that maybe we don't know. Maybe the branch manager don't know how to generate it. But you will say, sir, if I have to close the audit, I need this report. You need to ask, and a specific report. You can't say that, give me necessary report that is required for my audit. Then I will sign it. You have to say this is the report, and there are n number of reports. There are n number of reports that are available. You need to necessarily ask them saying that I need this report. Now the stock statement, the strength of the stock statement, as I said, it can be used for a period of 3 months. It can be used for a period of 3 months. And if it is not regularized for a period of 3 months, 90 days, then you have to classify it as NPA. However, there is another condition that you need to check for the CCOD, is the account has to be renewed. What is the first discussion we had? What is the life of the OD account? 1 year. After the 1 year, it has to be renewed. Now, generally the renewal means it is like a fresh sanction. They have to obtain the fresh CMA, they have to obtain, assess the valuation, everything they have to obtain, and they have to refix the limit, everything. Not necessary that they will do immediately after 1 year. They may do after 1 year, 2 months, or the borrower has not submitted, or the, let's say the renewal due has come in the month of June. The manager says, anyhow we have June, why should we take a provisional financial statement? We will take audited financials and we will wait and do it. We anyhow September is the due date, so we will wait. Now suddenly the due date extended from September to December. Audited financials will only happen on 31st December. So that's how the clients behave. For some reasons, if it is not renewed, and the renewal did not happen for a period of 180 days, then you should classify it as NPA. Even though the account is fully operative, the credits are fully happening, you still need to classify it as NPA. Clear? This is again another weakness in the CCOD. You will not find some stock statements being updated regularly. Second, the renewals are, so you download the CCOD statement with, there is a title called limit expiry date. So there will be a field name. I want to see the limit expiry date of all the CCOD account. If you find for the as on 31st March the limit expiry is beyond 6 months, straight away you classify them as NPA. Clear on this?
So in the previous
Yes.
the credit not sufficient to cover interest debited during the
90 days period.
So it was actually during
Any 90 days period. It's a block. It's like 7th August to 8th of September, October, November also is a
balance sheet date.
not a balance sheet. Any 90-day period.
Continuous.
Yeah, continuous 90-day period if the credits is not generally. So for you to ensure, you will generally see at least the balance sheet date, see whether the account is operational or not. But the law is 90 day, any rolling 90-day period.
Earlier it was balance sheet date, right?
And that is where I said the RBI now specifically said what we meant is specific dates and specific period. So that is where one crop season waiting or waiting for 91st day, all those things have come. Okay. Then the last category that we have to look at is making an asset into a loss. The loss asset will be any time, and there is no, generally there is an order of following the classification. Only for the loss asset, if you see there is an erosion in the value of the security, if there is an erosion in the value of the security, or there is a fraud that has been committed by the borrowers for taking the loan. For example, there is a home loan taken, but sale deed they have produced some colored Xerox altered documents, some modified intent and falsified the documents, and something have been submitted. If a fraud has been committed, so the branch can straight away classify these assets from the doubtful category to a loss category, or any time at the loss category. Now, for classifying something as loss, you don't need to wait for any of those norms. 90-day, all those norms will not be applicable for a loss asset. Next, government guaranteed assets. If you are finding some loans where the guarantee is by the government, two types of classification you have to see, whether the guarantee is by central government or state government. If the guarantee is by a central government, then it cannot be classified as non-performing. Unless otherwise central government has withdrawn their guarantee. Very likely branch manager will not even know whether there is any withdrawal. Now it's like the communication will go to some person in the HO somewhere, and very unlikely that someone is diligently sending it. Likely that letter comes lying somewhere in the book. But if there are some guarantees, you are finding that these loans have been guaranteed by the central government, then you should ask for, okay, is there any revocation of this guarantee has happened or not. However, even though the classification of this is not NPA, so this is an exception to the regular NPA, even though the classification of this is not NPA, it is performing, the RBI said income recognition of this should be ceased. You should only recognize income on the cash basis, not wait for the accrual basis, even though this is performing asset. So the exception to income recognition for a performing asset is central government guaranteed accounts. Even though that guy is not paying for 2 years, it's okay. Say at one point central government will step in and the RBI has to make good for it. Now, in case if the government, if the loan is granted by the state government, RBI say, I can't trust any of the states. So they themselves can go anytime back. It will become NPA with the same 90-day norm. So if there are any government guaranteed accounts, that classification also you have to see whether it is state or center. These are all one drop down when I am creating the loan account. By mistake I selected as central government, it was a state government. All those likely by mistakes will happen. This is one exception that is carved out for NPA classification. The next exception carved out for NPA classification is if a loan which is given against the strength of NSC. Today NSCs have come down, but banks own FD or a Kisan Vikas Patra. Against these bonds, if a loan has been given and that person is not paying, let's say I have pledged 25,000 rupees NSC and I have taken some 10,000 loan 10 years back. Person is not there, not visible, and not paying any single rupee interest or installment. Still, you don't need to classify it as NPA, provided there is an adequate margin available in those documents, because there is a surrender value for these deposits. As long as the surrender value is over and above this, it's like you have given loan against your own deposit. You continue to recognize interest, you continue till you hit the deposit. Generally, banks also give loans against their deposits, where they put, if the FD rate is 7%, loan against deposit it would be 7.5%. Like they will increase it, but they will give up to 90% of the deposit value, they will give. So which means up to 10% of that, even though if the principal installments fall and due, he has not paid everything, you don't need to worry. You continue recognizing the interest, continue marking them as a performing asset till the adequate margin is there. This provision is not applicable to loan taken against the gold ornaments, right? So we know the price of the gold is rising. Still, how much ever you think it is secured, performance asset is not about security. Performing assets is not about security. Performing assets is about the ability to pay interest and ability for you to see. You are in the business of the banking. Your job is to lend, collect, churn the money. So your job is to ensure the monies are collected in time. So this exemption is not applicable and the IRAC norms would be applicable. In case of a jewel loan taken for the agricultural purpose, you can continue to classify this in that category and link the repayment along with the crop season. That is permitted. So this question always used to get is like a tractor loan taken by the agriculturalist. It's a commercial vehicle. Should it be a priority, not priority? Should it be treated as an agricultural loan or not an agricultural loan? This doubt people always used to get it. So this you need to be taken care of. So before we take the break, let me just summarize the asset classification. Yes.
So PPF was not covered under this, so that's not taken. Loan against PPF is also allowed. So in that case, say you do not pay any interest, that is NPA.
That's NPA. Because they will not have right to go and touch your PF money. PPF, yeah, not there. Yeah.
Car loan can be decided based on RTC, can be classified as a gift symbol.
A car loan given to an agriculturalist, question is, can it be treated as an agricultural loan and priority sector loan? Like how I am talking about gold loan and then agri loan. Even in the gold loan, the master guideline circular says that you can classify basis asking the end use. So it is if the end use for the agri purpose classified. In my view, car loan cannot be classified as a priority sector. Okay. So as on the balance sheet date, you will find an asset as performing, which is we call it a standard or NPA. Standard could be no overdue or SMA 0, 1, 2. SMA 0 is up to 30 days, SMA 1 is 30 to 60 days, SMA 2 is more than 60 days, less than 90 days. Non-performing could be standard, doubtful, loss. Standard is NPA for a period up to 12 months. Doubtful is it is their first year of the after the substandard. Doubtful 2 is second year and third year it will be doubtful 2. Third year and above it is doubtful 3. Loss, it could be classified anytime by the bank, by the RBI or by the auditor. Right? So this is the provisioning asset classification. We'll come back and see what are the auditor checkpoints and how the income recognition and other provisionings we have to look at. So it's 4:30, we will come back at 4:45. Yeah, 4:45 will be assembly. So it's already 4:49 and generally after 5:30 our patience level will go down. Okay. So we'll try to complete the important things. And as on 31st March 23, just for a reference, if the NPA date is anything up to Jan 23, if the NPA date is up to Jan 23, it will be substandard. March 22, doubtful, 21, doubtful 2, 20 also doubtful 2, beyond that it will be doubtful 3 or loss. This for a reference, but you will have to create your own classification engine. Now, what we have seen is financial parameters. RBI also says, look at non-financial parameters and see if there are any inherent weaknesses in the account. In case if you find something inherent weaknesses, then you can go ahead and classify something as NPA. Now the non-financial parameters is if there is stress in the account, there are a list of parameters where the stress can be, I have listed out. If the commercial operations itself has not started, they have given a moratorium and the time limit to commercial operations are given. If the commercial operations itself is not started, or the post restructuring, the key restructuring conditions are all failing, so they are unable to fulfill that, or the security that has given has substantially eroded. Like I have given a car loan, there was a theft happened to the car. Now till that the repayment everything is good, but there is a substantial erosion in the security. In these situations, you can for a moment ignore the NPA norms, and bank can go to the next level and make a provision to it, because there is a stress in the account. And then when it came to inherent weaknesses, they have given lot of items wherein which you can focus on. The inherent weaknesses could be continuously it is over and above the sanction limit. Frequently there is a bounce, check is getting bounced. At the time of CMA, the projection was very rosy, but my actual performance is much lower than whatever it is. He has done the discounting of the bills and there is no realization of the bills that have happened. Bank, instead of going over and above the limit, they can go to the branch and ask for ad hoc additional limit. So if there is an ad hoc limit is frequently getting sanctioned, then that is also an inherent weaknesses. Undue delay in the commencement of the project. The funded and unfunded limits, that is not really commensurating with the operations which are there in the thing. I have given 1 crore loan and he is doing 1 lakh business. So you also need to see the size of the loan and the size of the operations, whether that does it justify it or not. The stock statements that are being submitted, how qualitative the stock statement, how periodically with the audited figures, how much they are accurate and it is matching, not matching. These are the various things that one has to check. And they have also given some guidelines saying that while you are classifying the asset, the classification should be done borrower wise and not the account wise. So let's say if the borrower has 10 accounts, of which only 1 account is NPA, rest all the accounts are proper, they are very much in line. Even though the other 9 accounts are very much in line, the asset classification has to be done at a borrower level, not the account level. And this classification which we are doing at a borrower level is to be done at the all banks put together, all branches put together. It cannot be I have a customer account one here and a different customer account elsewhere. So they have the CBS has to do a customer ID mapping, and if someone has become NPA in branch 1, it will be an NPA in branch 2 also. Not an account within the branch, but across the bank the classification has to be done. If the repayments are coming by way of one loan to another loan, or if the bill is LC is devolved, or the payment of bill is not happening, you also need to now see from how the repayments are happening. It shouldn't be that I have given one loan and closed another loan. 31st March I am unable to do a repayment, then I just create a bill and have it be discounted, and after that bill being used for adjusting the loan, that is not permitted. RBI said these kind of scenarios should not be entertained. The only thing which they have given a relaxation is if the bill is discounted under LC and favoring the borrower account, this you need not classify as an NPA if unless otherwise the issuing bank, if the issuing bank has revoked. Since there is another bank who said that they will be making the payment of this, so only in that scenario that LC which has been discounted can be moved out of not classifying NPA. The NPA, the LC need not be classified as the discounting of that LC need not be classified. If the bank, the issuing bank has validated and said that they will be making good for the payment, you need not be worried. If there is any funded interest term loan, if there is a funded interest term loan, I am unable to repay, so the interest itself is accumulated and created a new term loan. In those scenarios, you shouldn't be treating that this has been, proceeds have come and realized, so it is also a repayment of the loan using another loan. Again, this will not fit for the classification of non-performing to a performing. It is also expected that you check the SMA and NPA position as on 31st December, 31st January. Download those list of accounts. See if there is any upgradation of those accounts. It was not NPA March 22, but it was NPA in December and Jan. But in March 23 balance sheet, you are not finding it as NPA. So RBI said that please watch for these accounts where these have been made good nearing the balance sheet date. Nearing the balance sheet date, if these accounts have been made good, then you as an auditor can reclassify them as NPA if the source of that repayment is not genuine. When you say source, you can always ask how these accounts have been repaid. Is it a money taken from one other borrower account, one other depositor account and made an offset with this? This you need to ask for a genuine satisfactory. You only ask for the cases where it was standing as SMA2, say in December, it became NPA. NPA list can be downloaded every month. You can always ask, I want to see list of NPAs in February. I want to see list of NPAs in January. There is something called business object module, BO module for every CBS, where it generates a lot of reports. So you should ask, okay, where can I get this report, and see if there is the delta between Jan numbers and March numbers. If there is any account which has moved out, you only need to see the credits in those accounts and ask how they have moved out. So as RBI said, that certain accounts, even though this appears to be performing, if it is appears to be performing, you have a doubt, you can classify them as non-performing. Likewise, RBI also said, even though these are non-performing, you can classify them as performing. So they have worded, if you find something called a temporary deficiencies in the account, if there are any temporary deficiency in the account, then you can also consider this as a performing. What are the temporary deficiency? Let's say I have submitted the stock statement, the branch has not updated. Now the branch never has asked me to submit the stock statement. I didn't know that I have to submit. Branch has not submitted the stock statement. I have not submitted the stock statement. Or my business during the year has increased substantially and the OD that I have taken is not sufficient. The branch has not renewed it and I am continuously in excess of the drawing power but commensurating with my operations. Or I have submitted the necessary information for renewing the loan, but that renewal is not done by the branch. In these scenarios, there are deficiency which is classifying the account as an NPA. Consider these as a temporary deficiencies, and again it's your call. It's not mandatory that you should be making as a performing asset, but if these are the observations, you can make a non-performing asset as a performing asset. Is that clear? Any doubts on the asset classification?
In case of multi-banking facility, if the account is classified NPA in one bank, how we should take care?
Yeah, good point. Apart from the lending, you will find two types of another loan. There is multi-banking or a consortium loan. You will find both. Both are two different meaning, purpose and other things. In a consortium loan, there is a lead bank and the purpose is one. In case of a multi-bank, the fund is like, both are like a principal to principal, the lending happens. Both in case of a consortium loans and a multi-banking loan, customer has defaulted. Let's say lead banker is SBI, I am doing the audit of Canara Bank and the stock statements, everything is submitted to the SBI. They will allocate how much of the security belongs to me, everything. And the loan that I have given, my repayment terms are different, their repayment terms are different. If the customer has defaulted to SBI and SBI has marked it as NPA, but I am in my Canara Bank, 90 days overdue concept did not happen. Question that comes is, do I need to classify it as NPA? What do you say? Lead banker classified it as NPA.
NPA.
How many say NPA? Okay, how many say no, not NPA? Okay, now what about the rest?
Single loan. Single loan, it's only consortium arrangement.
Consortium arrangement.
So principally,
See, let's okay, why does this consortiums also come in? See, I want 1,000 crores.
big loan.
Big loan. Now, no bank want to, in fact, by the way, RBI has also condition like how we have seen 40% to be given to priority, etc. RBI also has a restriction that you cannot extend all those loans to one segment. You cannot extend all the loans to one borrower. So there is also cap of how much a bank can lend to a single person. That is first cap. Even though there is a cap, even I am well within the cap, I don't want to take that much risk. Then the borrower, there is other bank equally competing, I will also give, let us jointly give the loan. And I will take the lead of this 1,000 crores, I will sanction 600 crores. So 60% of the security will be pari passu. So when the mortgage is liquidated, in the percentage of the loan sanction, it will be adjusted. So basically it's a one loan split between all these people. So in the lead banker, there is a default happen. In my bank, he is paying regularly. Do I need to classify as NPA?
Unless there is fraud.
So now those who did not fraud, other factors remaining same. Okay. Other factors remaining number. How many of you now feel it should be NPA? Okay, how many of you say not NPA? And those who are not raising their hand, what is your answer, sir?
Majority.
Both of you. It has to be NPA. Then why did you not raise them? Okay. So it will not be classified as NPA. So you only have to look at the limits that you have sanctioned in your thing. If the repayments are in time, you don't need to be worried about the classification done in the other bank. Okay. Now let's move on to income recognition. Income recognition, pretty simple. We have discussed. If it is a performing, no worry, you can keep recognizing. But if it is not performing, only on realization. And when you realize the money, should it go to the principal first or charges first or interest first? So whatever the bank policy says, it would go there. That is the CBS appropriation.
Principal last.
So, RBI says it is your choice. So principal can also be the first. By the way, you will find lot of cooperative banks putting principal as first thing, so that my application, because they recognize that they apply the interest, they park it into the shared account, and they will do a further lending of the funds, all that they do. Then the interest on term deposits, all these NSE, IVP, KVPs can be taken into account, provided margin is there. So my NPA classification will not touch as long as I have the margin. For a central government guaranteed account,
No classified.
no NPA, but interest is on cash basis. State government, same like regular other things. Reversal of NPA, first time when you identify it as an NPA, you should be reversing all the interest which have been accrued till date, could be of this year, could be of the previous year, where the realization has not happened. So whatever the amount that has not been realized, entire thing has to be reversed. Reversal of interest till the realization that is pending.
This point number 2 of income recognition,
Ah.
interest on advancing a term deposit and all. So how it has to be linked? How it has been done?
Earlier, the methodology wherever the loan against deposits were done, there used to be endorsement. On the fixed deposit receipt, back of the receipt, they used to mark the lien, this is loan against it. But today, within the system, when you download the report, how many of the FDs are marked as lien? So you should also, as whatever the new sanctions during the year happened, you can ask for, I want to see loan against fixed deposits. So you have some list.
So talking about adequate margin, how to arrive that?
So I would have given a loan of 90% against FD. Okay. So that there is a delta of 10%. Money is with me only. Till the 10%, you can keep recognizing the interest. So till you hit the surrender value of the NSE. See, NSEs, you can surrender the NSE in between also. There is a surrender value that is given. So up to that, you can continue to recognize the interest. So that has to be computed each loan to loan.
Including accumulated interest?
Accumulated interest, yes.
Even for FDs also.
FDs also.
So it means FD 1 lakh, the interest will also be accumulating to that FD.
Yeah.
Total,
including the interest accrued and due. Interest accrued but not due, you cannot, because if he prematures, the interest accrued not due will not be paid. The change, there will be change. So interest which has been accrued and due. Generally, if you are renewing it, say if it is a 6 months FD, the system will calculate interest every month, but they will not apply it to the loan, the product account. It is accrued but not due. If instead of 6 months, I break it to say 1 month, my rate of interest may not be 6%, it would be a lower amount. So whatever, when you say FD amount, the deposit due amount, it is accrued and due.
This adequacy will be defined in the system itself as per the bank norms.
Correct. And yeah, so very good point. There is norms which is set by the banks. I'll come to your question. But you will find the most of the times these norms are violated for a good reason. For example, let's say I am Infosys, okay, and I am coming to your, the branch manager is going there and saying, sir, why don't you park your surplus deposits here? And I will say, fine, I will park the surplus deposits here. I want you to give unsecured loans to all my employees up to 2 lakhs at the rate of 5%. That's my condition. Now you will do your own ROI math and everything. If 1000 crores money is coming, it can be rotated and I can earn further more. and the loans that I will have to end up giving maybe some 100 crores, whatever. It's okay to take that arbitrage 900 crores will yield the differential 7% in its worth. You will find this in the industrial finance branches where they deal with the large corporates, where the lending or the deposit is beyond the specified rates. Now in my system, say when I have to create an account or I create a code, this is an unsecured loan. When I select the drop down of the interest rate, it will start only with 8%. I cannot even enter a percentage which is beyond less than that, because these are the security parameters that have been set. So what they will do is they will take a special permission from the head office and issue a sanction ticket, and they will run a manual application end of the month. They will recredit back the interest charged to the borrower account and debit it to the interest account. 90% of the transactions of the branch are expected not to be manual. They are expected to be system generated. In classic example, like in the accounting software like say Tally, most of the entries you will pass fortunately. But there are applications, even without opening the Tally screen, you can write a function, you can push the data into the database backend, possible or not, import from Excel and all those things. Likewise, any application data can be updated. So I can also reverse the interest that has been charged. So you will find, even though there are policies, you will also have the situations where the loans are given beyond the policies or beyond the threshold limit. You will also have to ask if there are any manual. They will say there are no manual. Sometimes they don't know, sometimes they will not say. So you have to find, it's an art, you have to know where you have to lay your hands. Yes, now your question.
Sir, so in case of loan against fixed deposit, except for the margin amount.
And when I say fixed deposit, it is bank's own fixed deposits.
Yes, sir. So nowadays they also give out credit cards against the fixed deposits. But in case of a credit card, that 90 days from the next statement date, so can we do the same calculation even for a credit card?
Credit card is a separate loan, but the strength of the limit has been fixed basis that, but it is not a lien marked against the deposit. You can use it wherever you have sweep in accounts. Those are the accounts where today the banking comes up with a very creative, everyday basis deposit happens, everyday basis money will be drawn from the deposit. So that is why up to the strength, the money which is there with you, you cannot classify it as NPA. You cannot doubt your own ability to pay the deposit. So that's the only logic. Okay. Now let's move on. Oh, sorry, I think we didn't cover. So the recovery in NPA should not be from additional credit, and appropriation is the bank prerogative. And if there is any interest or anything which has been charged, it has to be reversed. The recording of accrued interest can be in memorandum accounts. It is the bank prerogative. It cannot be in the borrower account. Let's move to provisioning norms. I'm sure some of you would remember what is the provision for loss asset? 100%. Doubtful D3. Okay, D2. So
Secure.
there is the moment you come into doubtful and the substandard everything, you will also have to now see secured and unsecured. For the doubtful on the unsecured portion, it is 100%. On the secured portion, for the first year, which is in D1, 25% of the secured, 100% of unsecured. D2, 40% of the secured, 100% of unsecured. D3, 100% of secured, 100% of unsecured. In case of a substandard asset, if it is partially secured, then 15% of the outstanding. If it is partially unsecured, then 25% of the outstanding. So there is a definition of what partially secured and partially unsecured. I'll come. but this is the provisioning norm. Your only job is to check the classification. Provisioning is done at the head office. But if there is a change in the classification, then you will step in, the provisioning accordingly will change. So you don't need to compute the provisioning, you don't need to be worried, this is only for your information. Another information, even the standard assets are also provided. As I said, as a conservative, standard assets also provided. Like agriculture and SME 0.25, commercial real estate 1%, residential housing project 0.75, and teaser, that's what I have explained. If it is a teaser thing, it is 2%. So this classification is also important. Most of the times the home loans during the teaser period, that itself is not classified. They will all set it as home loans. So this is one area where they want to keep the provisioning low, show the profit high. These are the things that they would do. When it comes to the substandard, I have said in case of a substandard, 15% of the total outstanding, but 25% of the outstanding if it is under unsecured exposure. Unsecured exposure means my realizable value of the securities, okay, is like, it is not more than 90%. Then you find that, okay, it also lacking an inherent ab initio of the security weakness, provided at 25%. So that's the only thing. Again, this is only information. Doubtful we have seen. Yeah. So the provisioning norms for the agricultural advances we have seen. They have said that extension by way of rescheduling is permitted. The moment it is rescheduled only for the agricultural advance, you will not be classifying them as NPA. You will not be classifying an agricultural rescheduled advances as NPA. The relevant master circular of RBI is there. This presentation would also be the shape. Then post reschedulement, the new dates have to be applied, because the terms of the reschedulement will now give what are the new dates of the repayment. It cannot be generic. It is RBI specifically said that now everything has to be date driven. It cannot be anything generic. So the NPA classification has to be applied after the reschedulement. What are the terms are there? Basis the terms you have to see. Please see if the reschedulement has happened at what date. And generally, most of the time they come doing the reschedulement wherever the agri loans are there. They do the reschedulement closer to the balance sheet date. Technically, that reschedulement may not also be valid, because the reschedulements, as I said, up to 2 years, up to 5 years, this is the priority of the bank. It's a bank policy. When the policy is framed, there is a timeline within which you have to do. For example, the COVID period, when the reschedulement was announced, they have said before the September board meeting date, list of borrowers have to be identified, it has to be presented to the board, and it has to be approved. Post approval from the board, before the 31st December, they have to collect the reschedulement confirmation, issue a revised sanction letter. So that means at a loan which has been rescheduled during the COVID period after December is not actually in line with the terms. And during the current year, there are no restructurings which have been issued by the RBI. So you will not find any restructuring possibility. So with that, I will come to the restructuring. So what is the restructuring? It means for some logical reasons, you are altering the terms. Could be interest rate, could be principal repayment period, could be holiday period within which you will pay. Now, once the loan is restructured, it always has to be read as prospective. You cannot say the branch manager has made an error and this has to be applied retrospective. Not permitted. This is you will find the restructuring retrospective again in the agricultural sector banks or the MSME loans, where you will say there was an error in the sanction letter. And today RBI also said that the next phase, the sanction letters have to be system driven. You will see most of the time sanction letters are printed in a Word document. It is also, again, Word means Control C, Control V. It is a OCC loan which is given, but you will see machinery should be hypothecated, the name should be, bank name should be affixed. It was a loan of a term loan, but the terms of this. So now the RBI said that the core should generate the sanction tickets. Currently around 30% of the loans, the sanction tickets are generated from the core only. You will find the sanction tickets from the system driven. Take a scenario, I have given a home loan and construction is going on, and I have said that I need a repayment holiday period of 9 months. The sanction did not include that. I did not pay for a period of 9 months. System marked NPA. They have now restructured. No, there was an error in creating to the system. I am restructuring it. The loan and everything falls due. Whatever calculated by the system is wrong. They restructured it. Now, can it be an NPA? It was an error done by the branch manager. Can it be an NPA? Yes or a no? As on balance sheet date, he regularized it, he restructured with the original terms. Going by the original terms, nothing is fallen due. Will it be an NPA or not NPA? But RBI says that if you are restructuring, it cannot be retrospective, it has to be prospective. Once restructured, you have to downgrade the account. You have to downgrade the account for a period of 1 year. You have to downgrade the account for a period of 1 year. What is the proof that manager has agreed for 9 months holiday? What is the proof that he asked 9 months holiday?
Sanction.
But sanction letter is saying no holiday. Now I cannot say no, I agreed but I forgot to print that. So restructuring cannot be a retrospective, it has to be prospective. This is one area you will find in the system, they will be altering it. These are the various areas the things are permitted, possible things will happen. Okay. Any questions?
Reschedule and restructure.
Okay, rescheduling today, rescheduling and restructuring is more or less same. The period within which you want to give it in phases. Like someone would ask it, okay, can I have a waterfall mechanism of payment? I will pay little low in the initial period, I will pay a higher period in the later periods. So in terms of restructuring, I can, it is a macro word, I can change the interest rate, I can change the moratorium period, I can change the holiday, I can change any of them.
So terms of the sanction.
Terms of the sanction will be changed. In case of a joint lending where there is a large consortium funding which is happening, there is a requirement that there is a central repository of the information of large advances which is being maintained. It is necessary that SMA 012 has to be periodically submitted so that the other members in the consortium are aware that okay, these are the accounts likely to become NPA. So you can call for, in case of a joint lending, what is the position in other branch, you will be able to see sitting in your branch. This is an information that you should be aware of. Now, any questions on income recognition?
Sir, regarding securities, it's updated gradually in the next year, like that the value of the security, if it is down, and the provisioning should be changing. But if the same securities continue, like in case of a vehicle loan,
Yes.
so
The RBI guidelines says any security, if it is not reviewed period beyond 3 years, it is as good as no security. Even if I have a house which is valued, you are not finding a valuation certificate every 3 years. That means the value of it is null in case of a long-term assets.
Including NPA.
For NPA, because it's like on secured portion 1%, unsecured portion another percentage. Second, the security, this is again a common error that happens, the security should be split between the loans. What happens is, if I have CCOD, I have a term loan, 2-3 term loans, I have given my house as a mortgage property. They will be writing the security value same value for all the accounts, because I have to enter the security value in each of the loan. So each of the account I have to specify how much is the security against it. The common mistake you will also find, the same security value is updated in all the accounts. So this is a common error. Again, see, wherever there is a human involvement, the errors happen. That is where you will miss out the classification. So wherever the security is fed, where you are paying multiple borrowers, just look at what is the security which has been fed in the system. Most likely you will see that the same security is fed multiple places. It's like it is, they also have control C, control B. They will enter it, the same thing, copy in the terms which are there, everything, it is copied and applied to the other loans also. That is also.
They don't have an option. Because the valuation is split into one property. This will commonly give it to the 3 facilities.
Yes, you have to split. The sum total of the security should be
In the
the value of
prorata?
the property.
In a prorata?
In any manner. 0 for other 2, 1 for thing. That is internal thing. But the value of the security, when applied to a multiple loans, the security value should not be
and in
repeated.
case of NPAs, the
Provision.
valuation report is to be obtained every
3 years, otherwise it is 0.
Is there a monetary limit or for all the?
For all.
All the things, including gold loan, you have to go and say get the valuation certificate for this loan.
But how it is going to affect the account? Because if the security value is mentioned same everywhere, it becomes NPA, so more or complete account becomes
The
NPA.
bad debt
But there is a provisioning.
Provisioning.
On a secured portion, you will charge say 25% or 40% you are providing. So given that the security value is high, the unsecured portion will become 0. So the provisioning will be affected.
But
In fact,
nowhere in
even-
the sanction letter
No,
you are
even-
finding that proportionate is to be divided. If
No,
one
no, so
property is
nowhere it
given
is
for
that. All that I am saying is your value of the security, sum total of the allocated should be same the value of the security. You can enter 0 for all the things and enter it only for one. Permitted.
total should be the same.
Yes.
In fact, even for loss of set, even if you have provided 100% also, as per master circle, we have to make the valuation for investment.
Because
Notwithstanding,
you have as long as it is still in your register, loan register, you will till.
So, notwithstanding the provision, we have to obtain, the banker has to obtain the valuation.
That is
once
this
it-
procedure because
RBI master.
yeah, see they will any loan after moving into NPA, they will wait only for a period of 10 years. Then they will sell off this asset to someone who will any of the 100% provision is there. So there are agencies who will buy these bad loans. They will say, okay, 10% I'll pay you. For banks, 10% is now an income. So they will go and figure out and fight with those people and try recovering those loans.
Yeah.
Yeah, so that is why it is necessary. As long as the asset is there, you have to prove. Okay. Now this is what the audit procedure that you have to look at it. I'll just keep saying the highlights because it's already 5:30. Now I can see emotions going to WhatsApp and the watch and other things. Firstly, you have a comment that the asset classification is done as per the prudential norms in conjunction with HO instructions. Now, why this is there is RBI has said that the prudential norms, the minimum. If the bank wants to make a higher provision, it is up to them. They can create a higher provision. So HO, in all the cases they adopt the RBI, but HOs can take a higher probability. Second, you should also say that there is ongoing classification in the CBS without manual intervention. You have to necessarily say there is no manual intervention. In case if you are identifying an NPA, you also have to go, why did the auto classification has failed? You have a job to say why. Ideally system should have classified, reasoning why the system has not classified. Basically they want to hear how they can strengthen the system. Second, in case of a deposit accounts, if there are debit balances, you also have to see if there is a deposit. Generally there are like SB account, which is a deposit account. If there is a debit balance, you have to see what is the system that has failed and where the interest could be anything has made this account into positive. Ideally deposit account should be a liability account, it cannot be an asset account. And you should also make an MOC for these accounts, saying that there cannot be interest charged on these accounts. They cannot, unless otherwise it has been regularized by the balance sheet date. So as on balance sheet date, if you have things, you have to check that. Guidelines also say, along with the classification, you have to check the parameters. What are the parameters? The term loan, moratorium period, interest rate, interest flags, the limits, step-up dates, due dates, first installment, installment amount, all these things that you which are there, you have to verify, because these are the basis of the information basis which you are preparing the report. You are expected to do a comparison of the NPA with the previous year. You are expected to verify the NPA with the previous year. There should not be any change in the date. There should not be any change in the date. But in case if you are thinking that there was an error, NPA should have been last year itself, or the date that has been adopted is wrong, so instead of substandard it will become doubtful. In those scenarios, then you should also say that okay, this has to be changed. RBI inspection would also happen during the year. There would be concurrent audit, or HO inspection, or branch inspection, or RBI inspection, or a revenue leakage audit. Amongst any of these 5 audits and internal audit, okay, any of these 6 audits, you will necessarily find there will be one audit in every branch. Concurrent audit at large branches, internal audit mandatory by RBI to be done by the internal staff of the bank, it cannot be outsourced. An internal audit they will be undertaking at a periodic interventions. There is an admin department which does the efficacy, so the branch can scale up at a future date, all those things. So there are different audits. So you are also expected to read those reports. The classification which is done by the system, you are expected to read what is the classification date. Is it an ongoing date and not a period end date? You cannot find the NPA date 31st March, 30th December, because today the loans have given where the repayment, most of the loans you will find the repayment date as 5th, 7th or 29th of the month. When the repayment dates are on an odd dates, the NPA cannot be on an even date, at a closer date. And in case if, we have seen this. Okay, if there are any upgradation during the year, okay, by the way, these are all the what the ICAI also has time and again from the perspective of higher economic classification expected you to do. If there are any partial recoveries which are there which on the loans and it has been made as NPA to PA, you have to qualify. The upgradation can happen if full recovery happens. You cannot, if the account becomes say 2 installments overdue, it doesn't make it as performing. For it to be performing, It has to be all over dues has to come, only then it has to be performing. This is also a weak area where manually they keep upgrading. Is manual upgradation possible? Possible. In CBS, what is possible? Anything is possible. Like when someone can give an unsecured loan at 5% and reverse the interest, anything is possible. Just you need to know how they do it. Classification should be borrower based, not an account based. You need to ask this. Then there is also a comment where the RBI on a periodical basis the branch submits various information. You are expected to check couple of reports that have been submitted to the RBI whether those values are correct and you are okay with those values or not. That's an expected to check. The RBI master circulars, during the year you have a master circular for cash credit which is 21, and the interest subvention related the master circular 35. Otherwise the original master circulars hold good, there is no change in it. I will skip this portion. The last one which I said I want to discuss is the audit quality maturity model. Now this determines the quality at which you are doing the audit. This is why I am discussing now, because it is applicable for central statutory auditors at this point, because they are auditing a listed entities. Technically it should have been applicable to the branch auditors, but they said it is only a branch, so this has been exempted for peer review for this year. But very likely
from April, it's from this April.
That's very likely. So you will be getting the firms doing only branch audit, right now not covered. Very likely it will be covered. So right now you can do the branch audit without peer review certificate. But in fact, as I said, you cannot even do a tax audit certificate if you don't have peer review certificate as on 31st March, as on 1st April 23. Till you get the peer review certificate, you can't even issue a tax audit certificate if you have 5 partners in the book. So these norms are becoming closer to the closer, expecting everyone to have one peer review. And once you do a peer review, again it has a shelf life. Your certificate is valid for 2 years, periodical review. And basically they have divided the model into 3 categories. Your practice management side, like how efficiently you are handling the operations, the HR management side, then the strategic and functional side. So there are a lot of questions. As you answer the question, right now it is a self, you yourself can evaluate where you are. Okay.
Identical to SQC.
Identical to
SQC, similarly.
what is SQC?
Institute
Standards of quality control.
Identical.
It is a self-explanatory questionnaire. It is not like one question I answered, I will get 1 mark. Some questions have higher weightage, some questions are lower weightage also. Okay. So basically they have given 600 marks score and 280 on the operation side, 240 resource management and 80 on the strategic and the functional side. So once you score it, you yourself can know what percentage of the marks you got. Then if your score is less than 25%, then okay, you are lagging behind. That's what you should know. If you are at 50%, then okay, you have to reach to the some next level of competency. If you are between 75 to 75, then you have done substantial progress. You are only left the highest level, which is 75% and above. So there they expect, then now you can optimize. How do you optimize further? Where the question, the weightage to the strategic and functional is only 80. You can actually start focusing on that area of it. Yeah. So it's a model everyone should evaluate themselves. Yeah. So with this note, I come to end of the presentation. Any questions? Anyone? Yeah, 5:40. We still have time. I still have time. So today we only covered IRAC asset classification and LFR was taken care. Tomorrow, Sharon and I think there's another speaker who is going to tell about how to optimize using technology. Trust me, if you are unable to use Excel, I'm only talking about Excel, because you will be going to the bank, they will be giving you a system. They will be giving you username, password. Today the banks do not have pen drive access. You are not permitted to copy anything or do anything. Max, there will be a shared folder. You will put the data into a shared folder, and there will be a system where you can do a mailing. You will be mailing. So you will be getting all the files, whether it is CSV or .zz. You should be able to convert that into an Excel, trim them, clean the data, apply simple, very simple pivots, VLOOKUPs, if function. Then you can, whatever the questions which I am asking, you need to be able to get every data you ask, you'll get into CSV. Today banks also have another system where you copy that file into that particular function. It will convert into an Excel file and give. So some managers know, some managers pretend they don't know, some managers don't even know anything.
They want to avoid.
But end of the day, your job is to get the data. Like I said, as a peer reviewer, I will only ask that, okay, how did you answer that as a insurance has been taken for the cash thing? You will say, no, I saw, but where you saw? So insurance certificate. Does this branch name was there? No, it was overall. So everything, even if you say no investment, this is not an investment bank, not applicable. Somewhere in the balance sheet you should say there are no investment in the balance sheet. Hence, this clause is not applicable. Every point for yes, no, not applicable, you need to have a reason why you are saying it. Even when you say necessary information has been asked for, I'll ask for what information you asked the branch manager. Show me that information you said you have asked. Tell me what information you have asked. What did he give you? So you need to have, these are the information that I have asked.
Documentation is challenge.
So documentation. That is the thing. It's less of MOC. See, because you have not issued MOC doesn't mean that it's a bad job. Just because there is an MOC doesn't mean that a great job. If you are not able to justify your audit working papers and audit report and documentation, that is where you will lose out. This is what I want to conclude, and I'm sure some of you would have got allotment, some of you have not got it. Don't worry, everyone will get it. So happy bank audit season, and I'm sure that there will be a cell which at the ICAI and even the state SIRC is also creating a separate cell where during the course of audit, when you get a doubt to reach, there are separate email IDs, there is a generic email ID, separate members who will be answering. Even as simple as I am using Finacle, I don't know how to generate or download this report. Where is there a way I can download this report? You can actually write. Someone who is in the panel who knows that, they will actually answer it. Yeah. So make use of it, the opportunities that are given by the institute. Yes, sir, your question.
In case of firm having partners more than 5 partners, PMA certificate will be applicable. AKMM may not be applicable. Correct.
No, you first, I am saying you evaluate yourself.
Yeah.
Peer review is must.
Yeah.
But it is a starting point. Even before you calling some peer reviewer, you will see, okay, where do I start?
But if you are not doing listed company and general tax and insurance company,
you don't need peer review. You say, I don't even issue any certificate, I am only doing bookkeeping services. Okay, don't. But you can always get a peer review.
His question is that if you are having 5 partners plus.
peer review is compulsory.
Compulsory.
AKMM may not be applicable.
Correct, agreed. I am saying, you first assess yourself, that's all I am saying. Then you will know where you stand.
Basic tool will be AKMM for peer reviewers.
No. Peer review is like if you are auditing listed company, insurance company, these things, peer review mandatory. And
under peer review, it's mandatory now from April.
Mandatory from 1st April onwards on a specified category.
Exactly.
For the bank branch audit, it is no.
Yeah, under the peer review template, the AQM has been added as a part 3.
Sir, if we are not doing, even though we are not doing listed company, insurance company and central statutory audits, if there are more than 5 partners, then peer review is mandatory.
Correct.
Okay, what if you don't get it done? You will not be empaneled.
Will not be able to.
You will not be taken for any empanelment. So you cannot do any attest functions. So to do attest functions, that is what is even to do tax audit for a small thing, peer review certificate is mandatory. Okay. Any other questions? Alright, so I thank Bangalore branch for giving an opportunity to be here to share some of you, and thank you all for your patience here. Thank you.
Good evening, members. 65 to 70% of bank branch audit would be IRAC norms and audit of advances, which has been covered by ICAI Venugopal sir today. Whether we continue to get bank audit annually going forward, or be it monthly in the name of internal audit or concurrent audit, let's hope so. But we chartered accountants need to be well versed with IRAC norms and classification and audit of advances. So let us be prepared for that. That was a detailed deliberation on the subject, sir. Thank you so much. On behalf of members present here and also managing committee members of Bengaluru branch of ICAI, I thank CA Venugopal sir for his time and effort for enriching our knowledge in the subject. One of the members was asking during coffee break, Venugopal sir takes session on Excel, right?
Yeah,
I said yes.
actually tomorrow.
And also somebody said, no, he is expert in systems audit. Yes, he is expert in many things. He'll be seen very often in our Bangalore branch. Thank you so much, sir. Thanks for your support to Bangalore branch. As a token of gratitude and respect, we would like to hand over a gift voucher to beloved C. Venugopal sir. Can I request Nagaraj, C. Nagaraj to come out from the desk and